Good afternoon. It's Sandra Pike from Roller Page Atlantic and the Pike Group. And you know what? What a great day to have one of our provincial lenders joining me. And I had no intentions of talking about the bank increase that happened last night, but luck has it, I have Mike joining me this morning. So before we continue, Mike, why don't you introduce yourself and tell us where you work and what your role is?
Okay, great. Thanks, Sandra. I really appreciate this opportunity as well. So my name is Mike Caron. I am considered the credit adjudication manager for CUA, but I do a variety of roles: broker development, real estate development with real estate agents and what have you, promotion of our mortgage products and our lending products as well. So I do pretty much all of it. I wear a lot of hats.
Yes, you do. Interesting news, yesterday with the Bank of Canada coming out again with another rate hike. So, what's your feel on things?
Well, I mean, there's no question that interest rate hikes are going to affect the market, but the public needs to understand a few things. So, a variable rate increase or a Bank of Canada increase doesn't necessarily mean that fixed rates are going to be increased because the variable rates or the fixed rates work on bond markets. So, it'll be interesting to see. So, all variable rate mortgages will be affected. So, if it's a variable rate or a home equity line of credit, or even if it's a personal line of credit that has a prime plus, they're going to be affected, and they're going to be affected by whatever the bank the bank decides to put their prime rate to. Most banks are going to go to 5.595. That'll be their prime rate. So if you're at prime plus one, you're going to be at 6.95 and so on. So those are the variable rates. And in some variable rate mortgages will be prime minus something. But that doesn't mean fixed rates are going to go up. So the last time that there was actually a increase in the Bank of Canada rate, fixed rates stayed the same with the banks, and in some cases went down.
Oh,
So
wow.
I think what we're going to see, and I don't know this for a fact because I don't have a crystal ball, but I have a feeling that the banks are going to look at their fixed rates, and now what's going to happen is consumers are going to look at the fixed rates and say, okay, if I can get 5.5 or 5.6 locked in for 5 years, that's not so bad, and I'll probably stick with something like that. Or they may take a short-term 1 to 2 year fixed rate and live with a higher interest rate for that short term, because the predictions are in about 2 years, things are going to start to stabilize. And hopefully TIF is right. And by the end of 2024, we'll start to see inflation back into place and interest rates will start to subside. But there's going to be some scares out there, and people should be concerned. But I don't think it's going to. People who want to buy a house are still going to find a way to buy a house. And it'll be interesting to see what the government of Canada does as well. Right now, we're faced with high ratio mortgages with stress tests. So there's 2 percentage points higher. So, for instance, if somebody gets a mortgage at an interest rate of 5.5%, that means that they're going to have to be qualified at 7.5%, which is fine, but it is putting people in a position, more and more people in a position to not qualify by that extra 2 percentage points. So prices are starting, not necessarily coming down, but they are stabilizing. But I've often said to people, when I bought my first house, I paid 12.5% for my first mortgage, but my first house was $85,000. So it's a big difference today that if you're getting a larger mortgage, I mean, in the Halifax market, you're looking at 3, 4, 500,000 and higher. It's a big difference if you're paying 5.5 to 6.5% on a big mortgage like that. So
Absolutely.
yeah.
So the reason we did get together today was to talk about the CUA and their program that they have for a first-time home buyer. And, granted, again, what just happened today, this may be a great time to talk about how, we could help the first-time home buyer out there.
Yeah, it really truly is. And we want to talk about this more and more. We've talked about it and we've had it for quite some time. But it's called a no down payment a mortgage, which means if you don't have a down payment, you can still come and see us. And what essentially that means is that we will lend individuals a down payment. And so the target market, the best target market for these for this type of product, are the people who are coming out of school, got decent, incomes. They're living in rental properties now that are probably anywhere from $1,800 to $2,500 a month. So they have the capacity to pay, but they may not, because of student debt and a couple of other things. They have to have a car loan, or maybe they're starting a family. They may not have the capacity to save. So we will lend them the down payment, which is 5%. They have to qualify for that 5%. It's over a 5-year term as far as the loan is concerned. They have to qualify for that 5% loan payment in their total debt service ratios, plus with the mortgage payment and whatever other debts they have. And then what we'll do is, and this is the unique part, is that we give them 5% cash back on the mortgage. And so they can take that money, which essentially equals the same as what they're putting down as far as a 5% down payment. And they can take that money and put it towards the loan and pay that off. Hence, they're in a house. They don't have an additional loan any longer. The loan is paid off. So now they're in a home probably 5 to 10 years earlier than they could have anticipated in the first place. And, maybe they have to start with a starter home where the price is, it's not their ideal home, but it gives them the opportunity to be able to start to build equity. And then 5 years to 8 years down the road, they can be looking at, as their family grows, they can be looking at selling that home and moving up or doing renovations.
So, so to confirm, I have 5 years to pay off my down payment back to CUA, correct?
You can pay it off that way, or you can pay it off immediately with the cash back that we give you on the mortgage on the day of closing. So we give them a 5% cash back. So let's assume that, let's just say it's a $300,000 mortgage, okay? So 5% of that, $15,000. The loan that they borrowed was $15,000. So we're going to give them a 5% cash back, and they can take that money and put that directly on the loan if they want to. And if there's a certain qualification as far as the total debt service ratios, they could actually use that cash back towards closing costs or other renovations or something along that lines.
So my mortgage with the CUA would be for 5 years, correct?
Yes, that's right. Yeah.
Okay.
Yeah.
What happens if I sell my house in the 3rd year because I'm moving? What happens then?
That's a good question. So there would be penalties, obviously, if you're breaking a mortgage midterm. And I don't like to say penalties. Usually it's an interest rate differential because they signed an agreement stating that they are going to pay this interest rate for a period of time. So there is a calculation that they have to pay called an interest rate differential. And also because they got a cash back, there would be, let's say, for instance, it was $15,000 and it was 3 years into it, then they would have to pay the equivalent of the 2 years that are remaining on the cash back and pay that back.
Okay. So my next question is, so I have the $15,000 paid back to you and my mortgage is up. And now I want to go from CUA. Now I just want to go to Scotiabank.
Sure.
Can I do that?
Absolutely. Transferable mortgage.
Okay.
We'll do everything we can to keep them, but they could certainly move it. Yeah.
My mortgage now is up in 5 years and I'm going to sell my home. What do I owe CUA? So if I bought the home at 300 and now in 5 years, I'm selling the home for 400,000. Your $15,000 is paid off. Do I owe you anything after 5 years if I sold my house?
Not on renewal, no. Just the principal balance, obviously, of the mortgage.
Well, of course, yeah. So that's what I heard. So there's no really downside then for any buyer.
There really isn't. It's like I said, there's so many people now that are struggling to get that extra down payment or that extra money for a down payment, plus the closing cost. And as you know, Sandra, the closing cost can amount to 3 to 5% as well. So it gets really expensive. So, maybe they've got 3% saved, but they don't have that 5% saved for the down payment. Well, this is an opportunity for them to get into that house so much quicker. And we're the only ones that be able to provide this as well because we're regulated by the province. So
Yeah.
the major financial institutions that are regulated by the federal, the feds, they cannot offer a no down payment mortgage.
Yeah, that's right. Yes, correct.
So it is very unique. And so there's really no downside. And we see people, and you can check out our ads, and you'll see where, those are true statements, whether it's through social media or through our ads through TV, or on the billboards or whatever. And they say, CUA helped me get into a house and I would never be able to get into a home with another financial institution. And that's absolutely the truth.
Yeah, no, absolutely. So, okay, I just want to ask questions if I was,
Sure.
using the program yourself to make sure I'm understanding, because I'm going to have to explain it.
Sure.
So I am buying, I don't know if you got a calculator on you.
I do.
Okay, perfect. So let's take it. I'm buying a $400,000 home.
Yeah.
What would what would my monthly payments be with the
Okay.
5% down and the interest that I have to pay back to you, like with the $15,000 loan?
Okay.
What would be
So
my
we're at the-
payment on a $400,000
Okay.
home?
Okay, I'm going to do quick quotes here, so just bear with me if you
Yep.
see me looking over at my other screen
That's
here.
okay.
So, equals multiplied by 4. One thing I should say is that so this has to be approved by Sagen. So CMHC doesn't do the no down payments. It is Sagen who is the high ratio, and the premium on that is 4.5%. Whereas if they had their own 5% down, it would be 4%. So the loan would be, the mortgage would be $397,100.
Yep.
And so the mortgage payment itself would be $2,657.46.
I mean, people are paying that now in rent.
They are. We know a lot of people that are paying $2,500 easily, and in some cases $3,000 for homes. I know in our neighborhood there's one home that's being rented out for $4,500 a month. So it really is quite amazing. So that the amount of people that are paying high rents that don't understand that they could actually be in their own home and building equity at this point.
Okay, so my next question as a consumer, so at $400,000, my mortgage payment plus my repayment back to you is $257. Let's say $258. Sorry, $2,058. So my next question is, how much money do I have to be making? A household income. What does my household income have to be to qualify for a mortgage at $400,000?
Okay, so you'd have to take so it's $2,657. You'd actually have to take the taxes and put that in there too. So let's say that's going to be $300 on a $400,000 home, I would say. And we'll say $100 for heat, which of course nobody can heat their house for $100, but let's just assume that. So times 12, that's $36,300 or $684 a year. So in order to be able to pay for that or to qualify for that, give me a second. So what did I say? 36. So about 95,000. So about $95,000 a year.
And the stress test to confirm that still is a part of the qualifications for CUA, correct?
Yeah. So I didn't include that. So you definitely have to do that. But the great thing about that is that we can push the envelope a little bit up to 44% total debt service ratio.
Yep.
And then when we pay off the the loan, then their ratios go down as well. So, I think it's safe to say, depending on what kind of debt they have and what have you, a little over $100,000 as far as a household income is concerned,
Yeah.
and they would qualify for that.
So why isn't this talked about more? I don't get it. Because if I only had to, when you look at this, the big picture, this makes so much sense as opposed to, oh my God, I gotta keep if I only have to save up 3% to
Yes.
cover D-transfer and whatever incidentals that, come up during closing. If I only have to save up for that and I'm making 100 grand a year, I can get into a house.
Yeah,
So
absolutely.
do you have limited resources for that? Let's say there's only X amount of money that you put that COA. Oh, wow. So this could be ongoing?
Oh, absolutely. Yeah. It's one of our best products. It's a differentiating product. There's no question. I know that the Nova Scotia government has a no down payment assistance program, but you
Yeah.
have to understand that that's repayable, and it's also they do put a lien on the home as well. So
Mm.
so it is this is a unique product to CUA, and again, I've said it a thousand times. Why don't more people know about this? I guess we don't. We talk about it. We definitely talk about it, but I think there's a little bit of confusion. It's not an easy discussion. We have to sit down with people face to face or on video to describe this, and so some people just don't quite get it. So we have to get, and we've got some excellent financial advisors in the branches that could certainly explain this, and so I think that there's an awful lot of people that just don't understand how it works. So
But again, at 400,000, if I have great credit
yep,
and I'm making $100,000 a year with the household family and I have good credit, my debt service ratio is good, like I don't have all this debt and I have 3% saved up, I could potentially qualify.
absolutely. Yeah, and I always say potentially, just because we have to look at everything. It is a high ratio mortgage. We have to get Sagen to be on side, but they're generally on side. And there's some people are worried about a negative net worth at this, let's say, this stage of life, because there's people in their late 20s and their early 30s. They generally don't have a positive net worth at this point. They haven't had a chance to. So then they've got student debt, or they, like I said, they've had to buy a car. And cars aren't cheap these days, so they got car payments and what have you. And so they're probably sitting in a negative net worth situation. Well, that's not going to get any better until they start to buy a house and then get to a point in their lives that they can start to save, or if they're in a job where they have a pension and what have you. So the best way to earn a net worth, or to get more net worth, is to own your own home. As they say, buy dirt.
Now I have one more question. So,
Sure.
they're talking about a lot of affordable housing coming to the market. And so new construction, let's say, I don't know, let's say 8 months anyway, safely to build. Can I use this program for new construction?
Sure. But we guarantee the interest rates only for 90 days. So, so there is a now, if it was a new construction, so we do draw constructions too. That would be another whole subject to get into, because there's not a lot of financial institutions that have the, shall we say, the experience in the branches to do draw constructions.
But I did. So we did that for our house here. I had no
Yeah.
idea that UA offered that. That's amazing. Okay.
Yeah. So and now turnkeys, no problem, obviously, and we can put a program in place for turnkeys if there's going to be built 6 months down the road. But for draw constructions, we can do it. One of the things that we're seeing as well, Sandra, in some of the outskirts of the area, is people are buying land, and instead of building their own home, they're going to places like Kent and Prestige and Maple Leaf Homes, and these places where they're building prefabs, right?
Which
So
is great.
yes, and they're fantastic. They really are. So and we're doing draw constructions on those as well. So
Is
so
there, can we just go back to the
yeah,
buyer program?
sure.
Is
Yeah.
there a particular type of product that you would not give the loan for. So we have a resale house. Would you do it on a mobile home?
No, not in a leased park. That's one thing that we wouldn't do. If it was a mobile home on a foundation on its own land,
Yep.
we could make an exception for that.
How about the tiny homes?
Yeah, we'll do them. So we don't have any square footage limitations. And it's interesting. I get these questions all the time about tiny homes, and I said, look, if we can get CMHC or Sagen to approve these, then we're fine. If they have to be a high ratio, but CMHC and Sagen do not have limitations, as far as I know, anyway, because I've got homes as small as 500 square feet approved. So
Nice.
that's really small, but the fact is there's some people that are looking at this and they don't need all the space that maybe we're used to, and they're perfectly comfortable with having a tiny home.
Oh, I think it's great. Well, Mike, I just want to, this was really good for me even today. Thank you, because I didn't know all the ins and outs of the first time home buyer program. So thank you for this today. I totally appreciate your time.
Well, thank you, Sandra. I really appreciate being invited, and all the best. Thanks so much.
Thank you.